Hi everyone, Jason Burack of Wall Street from Main Street. I just want to do a short video today. Remember how I did a video a couple weeks ago with this zero hedge article right here, how global central banks are all in, QE running at record 180 billion per month and rising. Well, the key word is and rising now, guys, because after current events in the last week or so, we are now up to over 250 billion per month in asset purchase programs. I think these central bankers are suicide central bankers. They are intentionally trying to destroy their currencies as quickly as possible to protect stock and bond markets. I don't think they really care about currencies in the long term. Obviously they're going to try to manage the exchange rates and control this devaluation, at least to a certain extent. They don't want their currency collapsing overnight like what's happened in some countries like Brazil or Russia or things like that. But they do want their currencies going lower and lower and lower over the long term. So let's analyze really quickly a few articles on the Bank of England's new asset purchase program. Note also in this article here, the zero hedge one I showed in the video a couple weeks ago, that it doesn't include Bank of England is in green. It doesn't include really any asset purchases for Bank of England in green to make that number up to 180 billion. So now you can basically add on, let's go to the Bank of England zero hedge one. Okay, so here's a Barron's article on Bank of England stimulus. It's going to be 10 billion in corporate bonds, and it's also going to be 60 billion in additional asset purchases. It's just insane. So 60 billion per month, 60 billion per month. Plus another 10 billion in corporate bond purchases. They're also lowering the interest rates for the first time in 7 years. So their new quantitative easing program from the Bank of England, in addition to the Bank of Japan, in addition to the European Central Bank doing an asset purchase program, or which is another name for quantitative easing or liquidity injections, in addition to the Federal Reserve rolling over any interest they earn on treasuries, which are being reinvested into other treasuries and also other assets, which, by the way, that zero hedge article isn't counting. So the Bank of England is now involved in this 435 billion pounds worth of asset purchase programs they've committed to so far just in the next 12 months. And that's a clip of about 70 billion pounds per month. Just 60 billion, 70 billion pounds per month. Just insane, guys. So I want to talk also about some of the other asset purchases that have come out from central bankers. Zero Hedge covered a story on this, but Louis Camarasano over at Small Gold went even further in depth. Zero Hedge talked about a mystery buyer reveals Swiss National Bank, which is their central banks. Their U.S. stock holdings rose 50% in the first half to a record $62 billion. So they are buying a lot of American stocks to help prop up the stock market. Just insane, like straight out of dystopian Ben Bernanke's 2002 helicopter speech about buying up large amounts of individual shares, entire companies, perhaps entire industries. The Bank of Japan is also doing similar things. In addition to that, Louis Camarasano went more in depth, and he found on the NASDAQ website, he sent me this a few days ago, he sent me some of the stock purchases and where the Swiss Central Bank has been buying. The bottle owned a lot of shares of Apple, Microsoft, ExxonMobil, Johnson & Johnson. They've been buying Facebook shares. They even, surprisingly, guys, I just found this out. Louis literally sent me this today, earlier in the afternoon. So thank you very much, Louis, for doing the due diligence. Article over on Small Gold. They have over $1 billion worth of gold and silver shares. So talk about a hedge for the Swiss Central Bank. If they destroy their currency, they're going to make a lot of that money back on the gold and silver stocks that go up like crazy. Some of their other toxic assets that are going bad. So I was just shocked that the Swiss Central Bank is actually buying enormous amounts of gold and silver mining shares. So they own Silver Wheaton, Sandstorm Gold, First Majestic Silver. This is just incredibly dystopian, guys. Unbelievable. So, in the span of a couple weeks, we've literally gone from 180 billion per month in asset purchases. And remember, this is just on balance sheet. This is not the off-balance sheet stuff, the currency swaps, and other things, the other forms of liquidity injection. So this is just the stuff they're putting out in press releases. That's all we know about so far. So just unbelievable, guys, in terms of what the central bankers are doing, changing the rules, trying to print up more currency units, take toxic balance sheets off the banks. This definitely has to do with the European banking crisis. They are trying to delay the collapse of British and other European banks. So just keep in mind that it's going to be a crazy year with all the volatility and things like that. So everyone be careful out there. If you are short a lot of general stock market indices, be careful. You don't know what the central banks are going to be buying. There is not just American plunge protection teams, guys. Now, with this evidence of Japan and Switzerland, there's plunge protection teams. It's gone global. So we've had, the Bank of International Settlements involved in certain markets and the different American plunge protection teams involved for years. But now it looks like all the other central banks are getting involved as well. This reeks of total desperation. I don't know how much longer they can keep this going. But, in theory, as long as the U.S. has a world reserve currency, the sole world reserve currency, a very powerful military, and also the petrodollar, they can keep this going quite a bit longer than most people think. Perhaps even past the election for a number of years, maybe 1 or 2 years after the election. Depending upon who wins the election. Although it seems, with the fake GDP numbers and the fake jobs numbers and the Federal Reserve's behavior, it seems that they're trying to help Hillary Clinton win the election because Hillary's been saying the economy's doing good, and Donald Trump is the one who's warning his followers that the stock market's going to crash and the economy's doing so bad. So just be careful out there, guys. We are now up to $250 billion, and that's just the stated amount of quantitative easing per month and asset purchase programs and other liquidity injections. That is not counting the currency swaps. Those things are non-transparent, they are opaque, and they are covert. So, and the central banks do not really list those on their balance sheets. Occasionally we get a PR statement about a small currency swap amount, but those are not the real numbers. You guys have known, I've been telling you this since 2014, and my source told me that just the central banks and the treasury departments, they knew they were going to have to do trillions and trillions and trillions of currency swaps just to prevent the system from collapsing. So we've gotten to basically that total extend and pretend game with the Soviet Union level of economic propaganda data and the asset purchase programs, all to keep the stock and bond markets up, to manipulate interest rates lower because, the banks and the over-the-counter derivatives market, it's just looking really bad out there. So obviously, I don't know if the banks are going to crash next week or next month, but with the programs that are going on right now, that behind the scenes, behind the curtains in that over-the-counter derivatives market, things are going really bad right now. Okay, guys, well, that's it for today. Just a short video. I want to give some credit to Louis Camarsano at Small Gold for sending me the research, and I will attach all these links to these stories. There's about 8 stories you can look at to see that the crazy amounts of liquidity injections from central bankers. I think they are trying to intentionally destroy their currencies, and clearly they're lying about the amount of inflation in the system because the government inflation statistics are not saying anything close to the real numbers.